So great. Uh, Thanks everyone for joining. Welcome to another LSE alumni webcast. So it's a very interesting topic today. We have news and views from venture cap, private equity, and some very decent family businesses within the region. We're starting off with Dr. Ruchi Dana, and let me start off with her profile. She's a qualified medical practitioner, and currently she's working for her family business in the steel business, one of the most prominent steel businesses within the region. She also did her MBA from Stanford University. So Ruchi, it's a pleasure to host you. Um, and also something that's missing from this bio is you're a very good friend of mine, but I think you didn't want to tell anyone. So I've let that one out. Essentially, you've been through this before. So 2008, there was a bit of a crisis, and banks weren't lending. Um, there was a demand implosion. So very much that what's happening now, this is like a double black swan, because you both got a demand implosion, a financial crisis, and also you got health issues in the workplace. So whereas in 2008, you could at least have a beer with your friends in the pub, today you can't even have that. Workers could come to work, but even today you can't have that. So what did you learn from 2008? What did you do better? And how have you dealt with your suppliers, your customers, your bankers, your landlords?
Sure. Thank you so much, Arun, for having me. It's a pleasure to be here. So I'll just go straight to the topic. So back in 2008, we didn't have many options. There were some options, but like the countries, the governments, nobody was as prepared as people are this time. So this time around, things are a little bit different. We have like credit insurance that's coming to save us at the moment. Apart from that, there are several things that have changed. So let me tell you what happened in 2008 was that back then we were mainly into the steel industry, and steel prices had fallen more than 50%. And the DP world, that's like the Dubai ports, it was really congested. Like we had containers coming in from various countries, and they were not like, there was so much congestion at the port that we were not even able to take out the material from the port. And a lot of people were like defaulting on their payments. There was a lot of demurrage that was accumulating at the Jebel Ali ports. So that was the situation back then. Back then, how we handled it was that we tried to liquidate as much stock as possible to various customers, and we also started value-added manufacturing of steel items. So initially, we were just into steel trading. Then we started manufacturing of end products like sandwich panels, profiles, fencing sheets, cable trays, purlins. So all of these things actually have a buffer because it's no longer a commodity. So there's a price buffer that comes into play, and that really helped us quite a lot. And we got approvals from various oil field clients. So we had like regular orders from the clients. That actually helped us quite a lot back then in 2008. Other thing that happened back then was that like instead of spending a lot of money on various leveraged assets and all, we were cash rich at that moment because we were liquidating a lot of stocks. So what we did, like just after the crisis, we bought a number of distressed assets, because at these times when there's a crisis, there's also a chance for opportunity. So we brought.
So what kind of assets did you buy?
That's how we entered into the oil industry. We are now into oil and gas as well. We are a little bit into retail, real estate. So these are all assets that we bought back in 2009 when the crisis fallen. Like a lot of people had left Dubai and various Emirates here in UAE. That's when we bought a number of assets. This time around, we are not actually investing a lot because it's uncertain. We still don't know like how things would happen, but like we were very much prepared this time. Because this time, like as soon as the governments announced stimulus and all, we immediately the next day we wrote letters to our banks for like getting relaxation on the interest rates, and even to the landlords that we had. And even as landlords, we were receiving a number of requests from our tenants. One of our tenants was a very well-known exchange house in UAE. So like a number of people defaulted, the number of people were asking for grace periods. But at the same time, we were also getting the same benefits from the government and from the bank. So that was really helpful. The thing is, much ready for things. Yeah.
How have you dealt with your bankers? Because obviously, I mean, your business is one of the jewels of Dubai, and it's helped build a number of iconic buildings here, amongst other aspects. but bankers only look at their P&L. And sure, they've matured over time. Before, in 2008, there was no restructuring departments in many of the major banks. And these guys were just lending and it's very much relationship driven. Now it's a bit more mature. There is a restructuring department and they know, what to do. But how have you created leverage with the bank? So what did the government announce and what kind of breaks did you get? Did you get, you don't have to go into any specifics, but how did you leverage the banks to either reduce the interest, get a haircut, or do an extension, or do some kind of grace period, or your approaches, and what would you suggest to anyone?
Sure. First of all, I would suggest like people to take initial steps immediately, like just as soon as the stimulus is announced or anything, it's better to just put in that written letter application to the RMs of various banks, even for personal purposes, like for home loans and all. If you write a letter to the RMs, I'm sure they would consider that. So because the sooner you react, it's better. In terms of banks, the banks in the UAE are still very much relationship driven. So back even in 2019, when the US Federal Reserve had cut the interest rates for almost 3 times a year, each time we asked the banks to reduce because the Central Bank of UAE had asked the same for the banks. And the banks were able to reduce the interest rate. So that was good. And at this time, like once we wrote the letters to the banks, banks were flexible enough, and we have had relationships with these banks for a very long time now. And it's more of a people understand the situations. We had a new project that was going on, so we had a little bit of term loan on that. So even for that, like the bankers understood it, that and they gave us some grace period and some moratorium. And apart from that, like in terms of government support, I can say that definitely the government here, in terms of if you're a tenant, normally we are landlords of all of the places, but there's one facility in which we are renting out the facility. So that the authority there actually gave us a 6-month flat grace period. That's not a reduction in interest or anything. It's just a flat grace period over the rent. So we saved 6 months of rent. What they asked for was proof of actually being affected by COVID. So we had to submit some documentation that our project was not getting commissioned because like the Chinese installers and various installers were not able to take a flight to the UAE, and some of the people were even stuck in the UAE. So our commissioning was not able to function. So that was the time lapse that was given it, and they were very much flexible, and they amended the entire agreement that we had with them. So they have been very flexible, but it all depends on how proactive you are as an individual or as an entrepreneur is to actually come ahead and ask for this help, because it's nothing to be ashamed of. It's only if your business is doing well, then you can serve the employees and the company in a better way, right?
But this all sounds very amicable. So obviously you're in a good shape, but what if there's a bit of tension? How would you suggest? Or is it because you haven't been in that position, there's no need for any kind of push and pull with the bankers and like trying to have a strategy in terms of how to push back as far as possible or reduce interest as low as possible?
Sure, I think you can only push the bankers as much as it's possible. But apart from that, there are other things that you can do. So one of the things was that the number of shipments that were on the way. This time, instead of having congestion at DP World, we actually stopped a number of shipments. Like the suppliers that had not shipped the goods, we told them this is the situation, and everybody understands. And there was a force majeure clause in various agreements, so we took advantage of that, and even the bankers understood that. And there were certain contracts that we even renegotiated, and that's something that's happening all around. So with suppliers, we renegotiated some of the contracts, and that helped us in getting some extra liquidity, because the fact here is that even though like we are in a good situation, but we don't know about the future. One of the factors that's really affecting us at the moment is that the borders are closed for various countries here. We are outside the free zone, so we export mainly to GCC countries and the Arab League. We give like custom free exports to all of these countries, so that has benefited quite a lot at the moment because the borders are closed. So like Kuwait, we're not able to supply to those areas. So even though like we have orders in place, the clients are not able to pick up the goods. So in that case, there's some amount of liquidity that you require, and that was like negotiating with the suppliers mainly.
And last question, because we're coming out of time. Sorry. So steel, usually it's an essential business. So I'd imagine that you weren't affected in the lockdown. So, and also there's cost to closing a furnace and setting it up again. So it's unlikely. I mean, you can confirm this where you shut down during the lockdown. But for anyone who was, what could you say is what has changed? How are your labor force? What kind of healthcare measures have you done with your labor force? What can they expect once they come online?
Sure. Yeah, we were an essential business, so we weren't close. But like we did, did some sort of salary reductions, and we cut down a little bit of our workforce because that was based on like the uncertainty. So like a number of people were already in their home countries, so we asked them to stay there.
Mm-hmm.
And there's also a temporary employment thing that's there by the government. So we have floated that we revised the salaries of a few people. So these
Mm-hmm.
were measures that we took. And in terms of health, there's definitely like the social distancing. And apart from that, even in if you go to labor camps, it's really difficult to actually manage social distancing. But we tried our best, like giving them sanitizers and like the necessary PPE, like gloves and protective gear. So that's something that we did. But apart from that, we really asked the workers not to interact with others. Like they would stay only in our labor camp. They would not go out. Like normally what happens on Fridays, they go out and they mingle around and all. So that's what we stopped. And even
Mm-hmm.
though government allowed it, but we still like sort of had our own restrictions, because if somebody gets infected, then it will really affect the entire business. And this time the crisis is such that it's not just financial, it's also based on healthcare.
Mm-hmm. Mm-hmm. Okay. No, thanks so much. Thanks so much, Ruchi.
Thank you so much, Rahul.
So moving on to Vera. Hi, Vera.
Hi, Arun.
Hi. So Vera is a venture capitalist expert. She was previously with 500 startups. She has almost a decade of experience, and she's a board member and senior advisor for LEAD Ventures, as well as that I'm not very good with long sentences, but an expert on digital platforms and ecosystems for the World Economic Forum. So thanks for joining us, Vera. I'd like to understand your point around venture capitalism. What are the opportunities, the kind of threats that are happening, and how VC is supporting the local ecosystem? So let's start with your first talking point. What is the current state of play for MENA startups in this current situation?
First of all, thanks so much for organizing this and thanks for having me. I also want to say thank you to all the listeners. We all know that the choice nowadays is huge. There's so much interesting content out there. So thank you so much for giving your time to us. All right, to your question, the current state of play for MENA. I want to give a shout out before I forget to two really great research papers out there. One is by Wanda, which is just came out 2 days ago, which is pretty much called exactly that. What's the current, what has been the COVID-19 implications for the entrepreneurial ecosystem? And another one is by an LSE alum as well, Philip, who runs Magnet. He also put some thoughts together on the entrepreneurial ecosystem. He has some great statistics there. Considering we only have 10 minutes, I'm not going to go into all the statistics, but I highly recommend those two research papers. They're very interesting and very easy to read and really give a great overview of the ecosystem here. I'd say, MENA, compares to basically the rest of the world as well. I think the shift, there's been a shift in the sentiment. We all started first very gloomy, thinking, oh my gosh, this is horrible and it's all bad. But now I see actually, some positivity coming out, and people are talking about this is a great opportunity, so a crisis, there's a quote, never miss a good crisis. So a crisis is also a great opportunity. And if we think back of, the dot-com bubble burst was an opening for Google and Amazon, then the financial crisis, besides being kind of the birth for all the decentralized systems, was also the birth of some of the most used apps that we use nowadays. Surely most of us have those apps on our phones, and Uber, Airbnb, Dropbox, etc. So I think every crisis brings an opportunity, and I'm really hopeful, and I think this crisis will also be the birth for some of the most interesting startups going forward. Of course, there are some winners in this. People speak about winners and losers. I think it's, losers is quite a tough term, but I think some startups definitely have to pivot, and that's, same in MENA and elsewhere as well. So if you are, it is difficult right now. I mean, let's be also realistic and honest. If you don't have an existing relationship with a VC, it's difficult to raise now, right? I mean, those who already had an existing relationship, those who have announced recent, funding rounds, they've been working on that for months. It doesn't happen overnight or in a week, right? So if you don't have an existing relationship, it is difficult, but it's possible if you have a product that's actually solving some of the pressing issues we have now. And we all know what those are. Like telemedicine became really big. Everything regarding, what we're doing right now, Zoom or any of those platforms that you use for digital communication, which is really here to stay. I know it's my next talking point, and I'll talk about it more, what's next. But I do think there's a big opportunity, not just for MENA startups, but for startups globally. And I'm hopeful. Yeah, I think we'll see some great players coming out of this, and we're seeing it already now. For example, if we take cashless economy as an example, when I moved to the region about 6 years ago, paying with credit cards was not a norm at all. Especially because I moved here working for Rocket Internet, and we had a startup, or still have, but not fully Rocket anymore, Namshi, that operates in Saudi, a fashion online, and it was always cash on arrival, right? So you bring the goods and you pay cash. Now with this pandemic, obviously people, for the safety reasons, moving away from cash and not doing cashless. So everything that we thought is coming anyway has been accelerated. So the future came really much quicker than we thought it would, and in many things for the better, really.
And I mean, how is VC supporting? So I'm sure you have like a portfolio, and from your network, do they have a game plan? Do they say, okay, this has happened, and this is what we suggest you do, in terms of there's a set template? Because obviously entrepreneurs, they could be young, they could be older, they could be cash rich, they can be in different positions, but there's a game plan and a format that they can follow to try and conserve cash. Because obviously, if there's in some cases you're in the winner's seat, aren't you? If you're in digitization, or if you're in like telemedicine, you're like, you don't have to do much, but in some cases you're not. So what kind of support have you given your team, more from a process and let's say fixed cost manner, how they can reduce their costs and so on, and also in terms of cash, like they already have a relationship with you and you can see that this is a temporary situation, and there may be some who say, look, I need something to pass over the time. What kind of support have you seen out there in both on these both levels?
So there's no one kind of, you can't generalize that. Everybody handles it differently. I've seen some that are really preserving their cash and not investing at all. And I have seen some others who are really jumping on opportunities, saying, we're being really opportunistic here, but let's invest. And they are investing mostly in telemedicine, in, healthcare, wellness. I think mental health became a really big
I meant in your portfolio companies, not the VCs themselves, but what support do they give to the portfolio? Because as I mentioned, like they're usually young people who may have not even seen 2008, and they don't know how to react to a crisis. When times are good, there's a growth factor, but now you've got to really clamp down. So what kind of support from like the senior guys have they given to their own portfolio?
Lead Ventures does not have a portfolio yet. We obviously did not have a chat about this before, but there's no portfolio. We're just building up the VC arm for the family office now. However, other VCs that I've spoken to, and I've spoken to many, on the founder side and on the VC side, if they can't support with cash now, what they can do is support with restructuring the company, right? And that's what very much needed, right? So if you're a startup that is not making any money at all because you were in a retail or restaurant industry, and it's difficult for you, so it's time to pivot. It's time to think, how can you do this differently? And there's a great analogy about, there's a movie of a guy who falls down in a Great Canyon, and in order to survive, he has to cut off his arm. It's quite really, I think this analogy is quite important nowadays. In order to survive, you really have to make hard decisions, and you have to make those decisions very quickly. That's really important. You have to be very decisive in this time right now. It's not time to think about it. And So VCs that can really help startups restructure, and think about things differently, give advice, also give mental support. I think what's really important nowadays, and I emphasize this a lot, we must not forget that the mental health is really important as well. Or maybe the most important in order to survive in this pandemic. And I think that's where many VCs can really be a helping hand for startups to just be there to talk, because it's essential. And I'm really happy that the stigma around mental health is disappearing in our region as well. We usually never spoke about it so much. And it started before the pandemic already. Some of the most successful entrepreneurs in the region started talking about failure. And it's really great to see that, we can talk about mental health more openly now. In fact, I was just speaking to somebody yesterday who told me that there are two mental health startups, one from Egypt, one from Saudi, that are doing exceptionally well right now, just because people are in need of it. So, yeah.
And so where would you be looking? Let's say, what are the opportunities that you see out there? Because there's the knee-jerk reactions, like people, you hear you read in the news, everyone's diving into vaccines and so on. But once COVID's over, life comes back to normal, one would hope that science prevails. So where would you say are the good long-term opportunities based off this?
Yeah, well, I mentioned already, I think telemedicine, not just because there's a big return on investment, but I think there's also a big return on people. You can make a big impact by giving the possibility for people, let's say in remote villages, be it in Africa or Nigeria, to be able to access a doctor online. That's huge. Online education, I think, is big as well. We know how many children go without education, even more girls. So to be able for those girls to have online education now accessible to them, that's a huge impact we can make. So it's not just, for me going forward, I really want to look much more into impact. So it's not just about what do we invest to have a most return on investment. It's actually what we invest to have the most impact on the society. And in fact, I think some of the most profitable companies think that way. They have a big impact on the society, be it Google or others, because you can actually gain your knowledge from there. So yes, telemedicine, health, education. And I myself also really passionate about ag tech. I think food tech is key, is really important, and I'm really bullish on that. We know that we import 85% of our food in Dubai. So the question is, how do we become much more self-sufficient? I think that's really important going forward, that we grow our own things here and don't rely on supply chains that can be broken very quickly, as we saw in this recent months.
Okay, excellent. And I don't know if we've answered this, but your last talking point was what's next in tech. Is this what we've already answered, or?
Let's talk about it, Arun, right? I think so. What I said, it's about creating impact. Not just return on investment, but return on people and other sectors that I mentioned. So yeah, I think the future is bright. Not to belittle the crisis, it's bad, but I'm hopeful for the future.
Thanks so much. Thanks so much, Vera.
Thank you.
And Nabil. So Nabil, nice to meet you again. Nabil is a seasoned investment professional with over 10 years. And he's been with Gulf Capital for 6+, involved in deploying its $750 million fund. He's very involved in tech and fintech space, and he holds an MSc from the London School of Economics. Thanks for joining us.
Thank you.
In terms of your talking points, what do you see as the investment landscape for private equity? Because as we know, there's very little liquidity initially. Even before COVID, there were not many deals. There's a huge valuation gap, or you were just seeing the same deals rotate again and again, and everyone was crowding into education, healthcare, and insurance, which is the same mantra. But what do you see now happening?
Absolutely. I mean, first of all, thank you again. A shout out to everyone who's joined today. I think it's quite useful just for everyone's sake to go through a sectoral landscape. So what happened historically, happened over the last 5 to 10 years, and what do we see now? So I think let's look at basically Gulf Capital itself and like a lot of the other PE shops. A lot of them have initially started looking at infra funds, government infrastructure deals. They were looking at government supported infra or oil and gas deals. So a lot of the assets in the early on days. Very quickly that shifted to more distribution and retail. So we started still seeing some sort of asset backed investments. And financing throughout has been quite challenging. Maybe over the last 2 to 3 years, at least in the region, we started seeing banks getting a bit more involved, but earlier on it was quite challenging. More recently, I'd say that at least at Gulf Capital, and I've seen a lot of other investors also push towards both businesses, tech enabled, a lot of focus on tech, and cash generative businesses, so business services, etc. And basically, that's from a sectoral perspective. From an entrepreneurial perspective, the business is still lagging behind. Like we don't have enough entrepreneurs out there. Maybe they're still at the VC scene, but we haven't seen them come out yet. And even if they come out and we see them directly, a lot of these businesses are not similar to Europe. They're still not institutionalized. That's why we do see a lot of corporate governance issues that can be resolved and others that have taken a beating recently, unfortunately. And you mentioned that there isn't enough secondaries out there, so there hasn't been enough exits in this scene. So that's another issue that we see here. But overall, I'd say more recently, a lot more focus has been pushed towards cash, making sure that preservation of cash, making sure that you are also investing in the new economy. We can like argue for an hour, what's the new economy, what's the new norm. So that's where I'd see. I mean, we've also discussed earlier in the session with VC. We see very similar themes as well at PE, and maybe there's some sort of crowding of that space. But
when you see there's like cannibalization, suddenly you guys have been looking at, $50 to $100 million deals, and you're now saying we're looking to the tech space where they're looking at from 1 million to 10 million. So isn't there some form of overlap, or is the ticket size? Isn't there a conflict of interest on the ticket size here?
I think we're still not going to go after the $5 to $10. Like that's still like too small. But I would say probably Series C, Series D, we'd start testing the water there. Like we've done our first deal, which was Visita.com. So that was. I mean, you're still looking at least a $25, $30 million ticket size with a growth potential to getting to the 50, 60, 100 plus. That I do see that a lot of these deals and interest, you sometimes need to almost invest into a sector and then almost create your own startup within that sector. We've talked about it earlier, but you might have to find a way to get into the payment landscape, and then suddenly you are the one who's creating a new company which never existed in the region. But that's an interesting way for you to crack that space. So we're being a bit more creative, basically.
But like PE and VC again are very different. I'd imagine the PE look at older companies. You've got 5 years of cash flows. You do your DD. It's a very slow, methodical process. You get a big four to do 2 months and so on. Whereas VC, there's a set template. You go in, you get a feel. You've got maybe 1-2 years of guidance in terms of figures. How do you adapt? How do you adapt your skill set as a private equity arm?
So the first part obviously would be like beefing up your team with guys who've seen this happen. So PE started playing in some of the VC later series fundings. So that's what we've seen. But beyond that, like the ticket size is still completely different. You're talking about getting into Series D, Series E. You're talking about the 50 million plus. You're talking about a business that's been out there for the last 5, 10, sometimes even 15 years, but never scaled up, or for a long period of time, but now they need that huge cash injection just to make sure that they push for the next set of growth. So we see ourselves as competing as much as we are almost complementing each other. There is always going to be that small slight touch of competition, but overall it's more of complementing like each other.
And And how has COVID been on your fundraising? Because again, we said there's a lack of liquidity. So is it, do PE funds really need excess funds? Do they need more funds to chase after the same amount of opportunities? Or what would you use it for? How would you make it work?
I think we've talked about more of the landscape and the fundraising challenges. So obviously we've mentioned the whole uh, issue with the LPs abroad, governance, etc. Like some of the recent governance issues from coming out from the region. We've talked
Mm-hmm.
about banking shying away from investing now, or like going for a debt EBITDA like 2 3 turns, or sometimes even less, maybe a turn if you're lucky. COVID us, and at the same time you have oil and gas hitting hard. So all of this is obviously not good from a fundraising perspective, but
Mm-hmm.
this, we said, creates a lot of opportunities. So you'd see basically businesses that have been quite resilient. You'd start focusing on new areas of growth, like just taking fintech, for example. Cashless in Egypt, Saudi is staggering low figure compared to even Southeast Asia. You're talking about 10, 15, 20% of cashless. So there are a lot of interesting pockets that you can definitely invest in.
Mm-hmm.
Wealth, we don't have that issue. Thankfully, we're still sitting on some cash for our bolt-on to support, the growth of our companies. Hopefully, when it comes fundraising next year, we'll probably look at that. But for the time being, I've seen other firms, struggle. We've mentioned this earlier in the VC part, but it's almost the same thing, uh, which is the existing ones don't face as much issues as the newer ones.
Mm-hmm. And in terms of you have a portfolio of companies. How do you assist them? Like Vera brought up the very important point that you've got to handle someone's mental health. You've got to be on the phone. You've got to, because obviously you've got customers, you've got shareholders, and even more importantly, perhaps you have employees. So all this is like a responsibility. How's your BCP, your business continuity process involved with your portfolio companies?
I mean, we look at 5 metrics. So the first one is obviously looking at the people. So we've talked about that, whether it's mental health, whether it's actually people being impacted by the whole, whether they contracted the virus themselves, supporting them, supporting their family. Uh, the other part is the business. So you just need to make sure, like the business itself, is the top line okay? Have you shut down? Like what's happening from a perspective, as well as like the economics of the country itself. Supply chain comes in intact. It's funny enough. Earlier we were kind of worried about China
Mm-hmm.
being manufacturer of the world, and then China suddenly opened up, and we're like starting to figure out US being the bigger problem maker here. So like you need to adapt basically from a supply chain very quickly, and see like one of our portfolio companies work with is Middle East glass. So from a packaging perspective, we need to make sure that you have the raw materials. So if that stops, the furnace shuts down. So you cannot afford even not to have ample stock. So in cash is king. We've heard that several times. I second what Ruchi was saying. If you don't have a working capital facility right now, go and get one. Like apply, like go very aggressively. You need to make sure, you don't know how long this is going to last. So just make sure that you're sitting on cash. Make sure that you get any facilities that you can get your hands on. You can always defer and negotiate and structure with a bank, but it's much better than not having cash.
Mm-hmm.
Part our cost control. So some portfolio companies would have taken, more measures. So if you've shut down your business for a month because no one can go to a beauty clinic, then you have to take these measures. But if you're a manufacturer and you have to continue working, in fact, you might need to give them some sort of raise. So it depends on how you can manage that. But that's typically what we look at.
Okay, no, thank you. And any last words? Because I think we've covered up the rest of your topics.
I'd just say, like, new segments, I would focus on resilient sectors. So just have a look at what is thriving in this norm, and seeing healthcare and education. We've thought that they're not going to be impacted, but they are. So just maybe we've talked about online education, for example, within education. So maybe it's not necessarily that. follow the cash. Cash is always king. So now unit economics becomes even more important. Like we thought that these industries are but they're going to be affected. And finally, tech is like a high, like sexy word, but at the end of the day, tech is really based on industry. So chase the right industries. You're not chasing. Most of the money comes from the growth in the industry as opposed to growth in tech itself.
But last question, what do you see as a resilient company, and how could you even invest in it? Because if it's resilient, then usually in the region, a lot of the, unless you're nationalized, very much is under family businesses. A lot of the businesses here are very promoter-led. So how do you even get into these businesses and say, look, I can add value? And because he's A, resilient, and B, this is probably his jewel, one of his jewels. So why would he want an outsider in? How do you manage to add value apart from cash?
I think that's where institutionalizing the business comes in place. Because at the end of the day, if you're going to a family office, he or she would really care about making sure that that business is sustainable for his generation, the next generation, etc. So a lot of these businesses, like I've read the statistics, I can't remember the exact figure, but a lot of them fail after the third generation. They just fall apart. So once you bring institutionalization, once you institutionalize the business, you're talking about proper corporate governance, bringing in a proper CEO, the whole management team, etc. And that's exactly what we've convinced a couple of our portfolio companies. Like that was the message. Like they've sold to us some of their crown jewels because they felt that this is the way that they can continue this business for the longer term. So that's the approach that you're bringing. One is institutionalization, and two is like you're bringing some of the expertise in terms of exit. So at some point in time, he'd like to exit, whether that be an IPO or any other form. It's much easier to exit with a larger player. So that's how we see it.
Okay. Well, thanks very much, Nabil. Thanks for your time and your thoughts.
Thank you.
And last but not least, we have Dipika. So Dipika is also an alumni of LSE and has an MBA from Yale University. She previously worked with Bill and Melinda Gates Foundation, very topical, and she is the co-founder of New Age Private Client Services, a firm that specializes in high value life insurance, and is also a director at New Age Insurance Brokers. Thank you very much for joining us, Dipika.
Thanks, Arun. It's a pleasure to be here.
So the insurance business, obviously no one wants to use it, but I think today is very much a rainy day. So it's very topical. Oops, 1 sec. So what have you seen the impact of COVID-19 on the insurance industry as of today?
So we're expecting COVID-19 to be perhaps one of the most expensive event in the history, with claims. I mean, numbers are still sort of running, but in tens of billions of dollars in terms of claims payments that will be made over this period. So it's going to be very, very expensive for the sector generally. And when we sort of talk about insurance, we're talking about lives of people. So you're insuring lives of people, and you're insuring things, right? So when you're talking about lives of people, we're talking about increase in medical insurance claims. We're talking about increase in life insurance claims, which of course has a huge impact on the profitability and the models that a lot of insurance companies sort of build out. And while the big ones, have strong balance sheets and will weather the storm, some of them won't be able to. There are, things that are being insured, right? Your car, perhaps, or your factories. Those are not getting used as they were initially, anticipated, right? You're not driving as many miles on your cars. So the expected claims are perhaps going to go down. So that's a boon. But in terms of what is happening as a result of that is folks are now going back to insurance companies and saying, reduce my premiums. Right? I'm not firing up my factory as much as I was earlier. I am not using my car as much. Premiums are going to go down. So in some sense, there is a double whammy that's happening whereby your claims are increasing and your premiums in the future are sort of going to go down. And also in terms of when we sort of see individuals, a lot of folks are losing their jobs, and that is beginning to impact the premiums they are paying. So you're seeing defaults, you're seeing claims on one side, and then you're seeing a reduction in sort of premiums going forward. So it is a tough time, I would say, broadly for the sector, and I think the duration of it will really determine, who remains standing.
So I mean, no business can go running and have all these dynamics against them. So what would you say? What is the counter? So obviously, if I have a car and I say reduce my premium, then the insurance agent has a choice to say no, I don't want to. So what is your counter? Where will you get your returns from?
So I think it's going to be a chicken and egg, right? I mean, the premiums are going to go down, but also, like I said, claims for the motor insurance is probably also going to go down if I take that specific example, right? So profitability to a certain extent can be maintained. I think we're just in a short time frame right now where we will see an increase in claims in certain sectors and reductions of premiums. But I think when you look at a medium to long term, the premiums would have adjusted, the claims would have adjusted, they would have found a new sort of norm. And like I said, some of the insurance companies who are able to who plan their balance sheet and their cash flows well will make those necessary adjustments. We are expecting, so for example, premiums for medical insurance and perhaps even life insurance to increase, not now, but maybe in the medium to long term situation when all of this sort of shakes out and when numbers are actually being crunched by the actuaries. Like, did the COVID-19 have a significant impact on the health of people, and will that impact continue on into the future, right? And yes, how should I, calculate the premium for Arun, Chulani, right?
Very good.
Yes. So I think so. That's like, so in the short term, it's going to be problematic. In the long term, those who have strong balance sheets will remain, and individuals. What we're seeing is individuals who have lost their jobs and are unable to sort of pay their premiums have stopped, paying premiums. But I think for the most folks, I recently came across this number that Google searches on, does insurance cover COVID-19 and things like that has shot up by 400%. So people are worried about what happens to their families if they were to get infected. So there is that general awareness. Unfortunately, it's also coming at a time where they are perhaps also losing jobs.
Yeah.
So in some sense, it's the industry is seeing a lot of folks who are willing to now get into sort of a life insurance product that they were perhaps unwilling to before. And individuals who have a decent, may have their incomes impacted, but not severely so, are entering into the life insurance market. We are especially seeing that for high net worth individuals and ultra high net worth individuals. They have investments go down by 50%, in some of their portfolios. And if they want to go back to their pre-COVID days, they have to, go back 70% to be able to be where they were before.
Yeah.
So now looking at life insurance product as something that would give them a guaranteed return, their families a guaranteed return, regardless of what happens to their market, right?
In life insurance, doesn't it escalate the older you get? And so there might be a time, I mean, you can't compare life insurance, I think, to the equity portfolio because there's volatility here, and one would hope this is a temporary loss. Whereas this, you're paying, and then the only way you get it back is when you pass away, and it's illiquid, isn't it? I pay my premium, and when I stop, isn't that the end of my money? As in, like, I've stopped, and then all bets are off. I never get my money back, what I paid. So how would you counter that? Or is this just something you should add to your portfolio of assets here?
So I don't think that is true. There are certain sort of a term life product would be, like a motor premium that you keep paying in. And of course, if you use it, you get something. If you don't use it, you don't get anything. But there are a lot of plans, universal life plans and whole of life plans, which do provide liquidity, which, you get a whole of life plan, you pay for a certain number of years, and there is flexibility. You can start, stop, you can increase, decrease. So it's not like you put in your money and you don't see anything at the end of the day.
Yeah.
So while it's not recommended to use that as your savings plan, but it does come in handy to have that cash value, which is guaranteed sitting in your account.
Sure. And obviously, this is a once in 100-year pandemic and black swan. But what are you seeing specific around this in terms of, are people now saying, I need credit insurance, I need business interruption insurance, or I need even a pandemic type insurance? Is there any specific products or an increase in demand specifically coming out of this situation?
We are. So I think you've hit on all of the right ones, right? In terms of credit insurance, those who've had it in the past are very thankful that they got it. We are seeing an increase in business interruption sort of requirements, but unfortunately, it's one of those things. While a lot of the companies were providing these insurance plans, and they already did have some language around pandemics that it would not be covered, some of them were not as tight in those exceptions. So a lot of those claims will be paid out now. What would be interesting to see is how do the life insurance companies these insurance companies design the new products. They would probably want to tighten those, loopholes further. They would probably charge an extra premium if you wanted cover for pandemics, because it would probably be an add-on. It would not be an automatic inclusion. So the insurance industry would also evolve, to price that risk and charge an appropriate premium for that.
And and any last passing words for our viewers?
I think it is, I think this sector, just like any other sector, will see, disruption. I think, in terms of technology, folks are in the UAE market and elsewhere getting used to sort of buying, your motor insurance online and things like that. While we are seeing, a need, through, people looking for it online, insurance, that translating that into actual purchase, I think that's where the gap is, and perhaps technology could sort of play a role there. And I think there is, shift in people's perspective, which is, I think, which COVID-19 has sort of brought about, in terms of how folks are viewing, life insurance, that it's not an investment. It is actually a product that safeguards your insurance, because your investments will go up and down, but your life insurance will pay out to your family. So, broadly speaking, I think this is an interesting time for this sector, just like it is for others.
No, thanks very much, Dipika, and thanks to everyone. I think that's the end. Thanks to all our speakers for following the dress code, but Nabil, it was Green Wednesday, and I think that's a wrap. Thank you. Thanks so much. I'll end it now.
Thank you.
Thanks so much. Thank you.
Thanks.
Bye.
Thank you.
Everyone.